All right, Estee Lauder. People are spending more money to get less, unfortunately. In the case of Estee Lauder put out some earnings, Pete, that were 14 cents a share. That's better than the 9 cents that was expected. Quarterly sales, 3.36 billion. That was down 4%. That missed consensus. And a lot of their products, people are just not able to buy as much of those products right now. And that's because of inflation. The manufacturers are charging, Estee Lauder is charging more for those products. And so that's not all bad when you've got puts. So for instance, just recently, we had massive put buying in Estee Lauder, Pete. When you take a look, this was last week, they were buying the 87 puts, were bought for 98 cents. Stock trades down hard today. Well, that's on the earnings as well as all the rest. What I'll emphasize for people is, sadly, the timing of that particular buyer was not great, because those options that they bought, yeah, they made a little money on that trade, Pete, as Estee Lauder traded down, but not like the big money they would have made if they held it into the earnings. But those options expired prior to this.
Yeah. Well, when you look at these numbers, John, you talked about it. You said the earnings were strong, and they were. But the quarterly sales were down about 4%. That's not so great. The skincare and hair care both down 7% and 6%. That's not so good. And how about that full year outlook and the concerns that they've got about China, Asia? That's a big deal, because that is a place of growth. And we aren't necessarily seeing that kind of growth because of all of the uncertainties that are going on. So they also lowered the dividend in that by 47%. That's something you don't see very often at all, but they're having to do a lot of different things to cope. They hit a 52-week low today. There's a lot of reasons, John, why, even though they've gotten hit as much as they have, they hit the 52-week lows. I don't know necessarily, given what they're telling us about the markets themselves and how they're going to be struggling, at least as we're looking into the next year. Wow, I don't think this is a name that you're going to want to say, well, you know what, they got sold off too much, I want to get in. I'm not so sure that's the case. This is one where I'm okay if I miss it, because I think it's much more dangerous to the downside than the upside.